Now I want to touch on real estate and a thread by Nick over the channel Reventure Consulting. Usually I am concerned that Nick is sometimes heavily bearish on real estate, sometimes potentially a little too much so. However, a thread that Nick put together here I think deserves fantastic credit because it's exactly what I've been seeing on the ground in real estate. It's been something that I've been struggling to determine the end result for. And while Nick doesn't have the end result, it gives more credence to these fears that I've had about coming problems in the real estate market. And this isn't to argue that, there's definitely going to be a massive real estate crash, but it is to argue that if you're looking at investment property, this is something you've really got to be careful of. So take a look at this and I'll add some commentary. So what do we have? Nick mentions the Airbnb collapse is real. Revenues are down nearly 50% in cities like Phoenix and Austin. Watch out for a wave of forced selling from Airbnb owners later this year in areas hit hardest by the revenue collapse. And so we list via data collected from All the Rooms, which is basically a data analytics website for Airbnbs, kind of like an AirDNA. It's a little expensive if you want to get the 4-year history. But anyway, this is a service that, Nick has broken down the revenue drops that you're seeing year over year in some of these different markets. And you can see these are all very popular Airbnb markets, whether it's Orlando, Myrtle Beach, San Antonio, Texas, Nashville, Tennessee. And before we keep going on this thread, I'd like to interject what I've been finding and what I've been talking about. Since the beginning of the year, I've been talking about this fear that I'm seeing rentals stagnate. And not only am I seeing rentals stagnate, but I'm seeing people who are coming into the rental market almost panic. And they're cutting rental rates very quickly. And this is great from a deflation point of view. It's actually what's reiterated my desire to just be all in on equities right now, because I think there's a rental reset that's occurring. Airbnb is feeling the same thing. When you do a fundamental analysis on Airbnb, what you find is they're trying whatever they can to get more supply, even if that means opening up Airbnbs in partnerships with apartment building landlords just to get more supply in because they need the numbers to go up. And if revenues are falling, then the only way Airbnb can pump their numbers when revenues are falling to show growth is by having more rooms rented. But the problem is, Airbnb consistently suffers from a quality standard issue. And the more you increase supply for Airbnbs, the more you lower the rental value of those Airbnbs, the more desirable it makes it to actually just go into a Hilton or a Holiday Inn where you're going to get a consistent experience and consistent quality. This, in my opinion, will reiterate this loop of falling revenues for Airbnbs. Because once you lower the price of an Airbnb, or once you start chasing hotels and you start introducing more lower quality Airbnbs to try to prop overall revenues for Airbnb, what you end up stuck with is people who are like, okay, well, would I rather rent a 1-bedroom apartment or just go stay in a hotel for, $100 a night or whatever it is? So now the question is, what happens to real estate? Well, when rental levels compress, from a high-level overview, and then we'll get specific on it. But when rental levels compress, what happens is your return on investment goes down for real estate. This makes a lot of sense. If somebody's going to buy a home right now with 25% down and rents are compressing, the odds are you're going to be not only negative cash flow because interest rates are so high, but if rents are falling, you actually have the downside risk of your negative cash flow increasing even further. This is a problem, and it basically leads to less people wanting to invest in Airbnbs or single-family real estate. In fact, it potentially creates the opposite, and this is something that I've been waiting for, and it hasn't happened yet, but the red flags are coming. The red flags have existed for over a year now, but the red flags are really starting to compound, that as we start seeing these rental rates come down, there's a high likelihood that running Airbnbs becomes unprofitable that being a landlord in this environment becomes unprofitable unless you do it and conduct it in a certain way, wedge deals and otherwise. And there's a chance you end up seeing investor liquidations of these properties. And this is a thesis that Nick has as well. And I'll give my opinion on how severe I think that'll be. But first, take a look at this. Nick says what's scary for the US housing market is just how many Airbnbs there are. Data from all the rooms show that there are, when you add up Airbnbs and VRBOs, about 1 million vacation rentals compared to 550,000 homes for sale. This is a little higher now. By some accounts, we're probably closer to about 700,000 with some of the latest data. And this usually rises at this time of year, although it hasn't risen as much as it generally does around this time of year. So there is definitely a missing set of inventory. We're definitely below inventory levels where we should be. But what's remarkable is this explosion here, really driven by the pandemic. You could see this pause here in 2020, and then almost a return to trend of this explosion. If anything, you might be slightly below trend. But anyway, you had this explosion here in 2021 and 2022 of vacation rentals. And the question is, if it becomes unprofitable to operate vacation rentals, could these potentially come on the market for sale? And the answer to that is yes. In fact, here Nick argues that ground zero for the Airbnb collapse is a city like Phoenix, where you've really seen a more exacerbated explosion in the level of short-term rentals available and the massive revenue declines that these Airbnbs are able to generate. And they measure these revenues as total revenues rather than sort of nightly rates. Even though we're seeing nightly rates go up, vacancies are going up for Airbnbs, which means total revenues are falling. And these are what we're seeing here. And so whether that's Central Texas or whether that's Phoenix or Washington, Idaho, Oregon, whatever. And so the point of this is, could this lead to an increase in the number of units for sale? Because, for example, if Airbnb owners pivot to long-term rentals, now all of a sudden you put pressure on the long-term rental market, which we're already seeing. This is a very typical move. A typical Airbnb owner says, well, if I can't get enough money from Airbnb, I'll just rent it out. But what happens if that becomes unprofitable as well? Well, then it makes sense to sell, especially if you couple it with a rising stock market. And that's where you have this recipe for disaster, but nobody knows what's actually going to happen. Nobody knows. And that's the confusing part and the frustrating part, because a lot of people are like, I can't wait to get a good deal buying real estate. I want to take advantage of the concepts in the 0 to Millionaire Real Estate Investing course that Kevin has, where he teaches everything that he knows in coordination with people with over 30, 40 years of experience in real estate, all in a beautiful packaged together course and course member live streams where we work together on making sure we can build our wealth. So a lot of people are ready and waiting to buy real estate. But the question is, when does the inventory come? Thanks to the 30-year mortgage, we don't know. Because technically, a lot of Airbnb owners and landlords have locked in rental rates, or interest rates rather, below 3%. So we don't necessarily need to see a flood of inventory. But as rents fall, we should, as investors, pause for a moment and say, okay, where are rents going to bottom? Because if you're in a cycle of rents falling, whether that's because Airbnbs are adding to more supply or owners who would ordinarily consolidate households and sell properties are renting those properties instead of selling them, well, then you're putting even more pressure on the rental market. Where does that bottom? And before we have a bottom, we've got to ask, do we want to be investing in a market where rents could fall and it could be more difficult for us to actually rent out a property? That's the big question right now. Keep in mind that during the pandemic, and a lot of folks forget this, during the pandemic, we had a lot of household formation. We actually had excess household formation. That's a way of saying if you've got, let's say, a mom and a dad, and then you've got 2 college kids. During the pandemic, those 2 college kids maybe went out and rented apartments. Now you took 1 household and you created 3 households. Well, now you somewhat have a reversal of that. You have a lot of folks like, hey, while we figure out what we want to do and where the economy goes and we find our jobs, we're going to go live back home with mom and dad. Now you're taking 3 households and you're creating 1 household. That lowers rental demand at the same time as rental supply is increasing, and that creates a disaster for rental pricing. So watching rents, not just Airbnb rents, but just nominal rents as well for long-term rentals, is going to be critical for the next 6 months. I really think you really ought to watch whatever market you want to invest in very closely for the next 6 months, because prices are often propped up by rents. And when rents fall and renting becomes more desirable, you actually remove buyers who would be buying, who just say, why would I buy if I could just rent for a lot less? That's how the free market works. That's how you get to a new equilibrium. I'm not convinced that we've reached that new equilibrium. Even though housing prices have started rising for the first 6 months of 2023, rent prices have not. And we're not sure where that bottom is in rents, especially with the Airbnb disaster ahead of us. So, we have to wait to see. We'll see what happens, where that rental bottom is. And I'm not suggesting, wait to buy real estate to perfectly time the market. I'm generally a big fan of don't wait to buy real estate, and then wait. But if you are a real estate investor, I do think it's prudent to look at a market that you're investing in and expect what the rents are going to be. In other words, and I've seen this in so many markets. I'll give you some examples. I've seen exactly what I'm about to describe to you in Florida, in Texas, in Northern Florida, in Southern Florida, in Central Florida, in Austin, Texas, in Dallas, in Fort Worth, in Vegas, in Salt Lake City, in St. George, in different parts of California. I mention all these places because I've been to all of these places just within the last 6 months. I've been to dozens, if not hundreds of different cities. And I'm seeing the same thing everywhere. What am I seeing? Every time I go there, I look at the available rental supply, and the available rental supply is increasing. At the same time, so are incentives. First month free, 2 months free, this guarantee, that guarantee. It's not a landlord market right now. It's a tenant market. Tenants are driving the boat, and that gives tenants pricing power, not landlords. I like being a landlord in a landlord market, not a tenant market. Tenant markets are harder because you have to be more competitive with your pricing. And that makes it very important for you to sharpen your pencil when you're evaluating, does it make sense to buy this property or not? Because if you're buying a property based on what it was renting for last year, you're going to get screwed. If you're buying an Airbnb now based on what it was Airbnb for last year, you're going to get screwed. So, do I think the housing market is going to utterly collapse, like worse than 2008? No, absolutely not. Do I think that if you're an investor, you have to be very, very careful right now about what you're projecting your rent is going to be? Absolutely. And is there a risk that prices will stagnate or fall? Yes. I actually think after the correction we had last year, where prices fell across the board about 10 to 20%, and we've had some recovery since then, it's more likely that prices will actually stagnate. Maybe we'll get some kind of trend slowly down. I don't think we're going to go back to what we saw between 2010 and 2022 for a while, which was basically just real estate only goes up. You're probably going to have a little bit of vacillation and maybe even a slight downtrend. So I think as an investor, you want to be very careful of that. If you're not paying attention to those, you'll end up making mistakes. If you are paying attention to those factors, I think there's going to be a lot of money to be made in real estate. That's why I'm really, really, really excited about a real estate startup, because there's going to be a lot of money to be made for people who can identify those opportunities and invest in the right areas at the right times. So we'll see. Those are my takes. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced